Hello guys, welcome back. If you haven't already noticed by the title, I have sold out of some of my dividend stocks. So today we're going to be kind of going over how my investment strategy has kind of changed recently, why I'm selling these stocks, the stocks that I'm actually selling, and much more. And guys, my name's Ryan. I'm 16 years old. I do dividend growth investing for the long term. If you're new here, it would mean a lot if you could subscribe. I make videos about dividend stocks, stocks that are on a dip, and much more, videos like these. So if you do that, I'd really appreciate it. Also, if you guys want to see my trades in real time, join the Discord, link in the description. There's no stupid course or anything. It's all free. So if you just don't want to wait every month for my portfolio updates, go check that out. With all that out of the way, make sure to smash the like button, subscribe, turn on post notifications, and of course, roll the intro.
Hello, I like money.
Ideally, with my stocks, I want to just buy them and never sell. But I have made a video on circumstances where you should sell your stocks. I believe you should sell your stocks if something fundamentally changes with the business and you don't agree with it morally. You should sell the stock if you think it's overvalued for how strong the company actually is. You should sell the stock if you see a better opportunity elsewhere. You should sell stock if you see bad trends on their financials, bad free cash flow, a downgrade on their economic moat, and all that other good stuff. And your last resort is if you about to go homeless and that's the only money you have to sell the stocks then. Now let's move on to some of the stocks that I've actually recently sold, and I'll explain why I sold them. I was pretty abundant in cash, so I was looking for opportunities where the stocks, were overpriced for how strong of a business I thought they actually were. So all these money are coming from mainly, consumer defensive and household stocks that, are slow growers but still are strong companies in my opinion. If you guys remember in last week's portfolio update, I said that I sold 2 shares of Kimberly-Clark. This was half of my position in Kimberly-Clark, and I sold at a slight gain, including my dividends that I received for the year that I owned it. I like Kimberly-Clark as a company, but it is a pretty slow grower, and I saw better opportunities elsewhere. So I invested that money into Starbucks and 3M, both companies that I think really highly of. 3M is pretty cheap right now relatively to how strong of a company they are, and Starbucks is really cheap right now. So that's just an example, and I got some extra spare cash, just for some sideline money, so if anything dips, I can use that. Then I sold 1 share of Colgate again at a slight gain plus dividends I received. Colgate again is a slow grower and is trading at a pretty high PE ratio for the slow growth that they produce. Initially, I was planning to use this money to buy Starbucks. Unfortunately, Starbucks didn't hit my price target of the low 70s though, and I saw a better opportunity in buying 2 shares of Walgreens, which is trading really cheaply right now. They have really good dividend growth, and I find really good value in this buy. I think that I didn't buy Kimberly-Clark and Colgate at the right times, as I want to buy these stocks when they're highly out of favor. But I am happy that I could sell out of these companies at a slight gain. I trimmed these positions and will definitely look to buy back in when they're trading at cheaper prices. And this is the big sell, guys. I sold my only share of Hershey, one of the first stocks that I ever bought, at a 51% gain plus about $10 in dividends that I received. I was toying with this idea, but I just realized that a company like Hershey with, slow and consistent growth, which is what I love, shouldn't be trading at like a 27 PE ratio. I took this capital and invested it into Target. Target is trading way cheaper than Hershey. I think it has higher brand growth potential than Hershey and has higher dividend growth than Hershey. So I saw a way better opportunity in Target, and I'd also get some extra spare cash for the sidelines. Now I can have more cash on the sidelines right now, and I can keep saving the money that I'm getting from my job that I'm working right now mowing lawns. I loved Hershey as a company and never wanted to sell it, but I just saw too good of an opportunity. Those are the current sells that I have right now, but if you want to see anything that I sell, make sure to join the Discord link in the description. I view my portfolio as a mini Berkshire Hathaway, so here's Berkshire Hathaway CEO Warren Buffett, the greatest investor of all time, on when he sells a stock, and his views are very similar to mine on this.
I just want to thank you for sharing your wisdom, and my question is, what criteria do you use to sell stock? I kind of understand how you buy it, but I'm not sure how you sell.
Yeah. Well, the best thing to do is buy a stock that you don't ever want to sell. I mean, that's what we're trying to do. And that's true when we buy an entire business. I mean, we bought all of Geico, or we bought all of See's Candy, or the Buffalo News. We're not buying those to resell. I mean, what we're trying to do is buy a business that we will be happy with if we own it the rest of our lives, and we expect to with those. It's the same principle applies to marketable securities. you get extra options with marketable securities. You can add to holdings, obviously easier. We can never own more than 100% of a business, but if we own 2% of a business and we like it at a given price, we can add and have 4 or 5%. So that's an advantage. Sometimes if we need money to move to another sector, like we did last year, we will trim from some holdings, but that doesn't mean we're negative on those businesses at all. I mean, we think they're wonderful businesses, or we wouldn't own them. And we would sell, if we needed money for other things. The Geico stock that I bought in 1951, I sold in 1952. It was, went on to be worth 100 or more times before the 1976 problems, 100 or more times what I paid. But I didn't have the money to do something else. So you sell if you need money for something else. You may sell if you believe that valuations between different kinds of markets are somewhat out of whack. And we have done a little trimming last year in that matter. But that could well be a mistake. I mean, the real thing to do with a great business is just hang on for dear life.
Guys, honestly, if you guys asked me back in January, or even when I started this channel about a year and a half ago, I would never say that I would have sold out of these companies. It's crazy to see how my investing strategy has, really changed recently. If you enjoy content like this and want to be part of my investment journey and see how my mindset keeps on changing, make sure to subscribe, turn on post notifications. Thank you guys so much for watching. Do dividend stocks, odd drugs, and have a good one.